Hello everyone, welcome back to this week's Technical Insights. Last week, US major benchmark indices managed to clock the first positive winning week in over a month, caused by the turmoil over US trade tariffs and recession fears. Last Friday was also the quadruple witching day, which is when stock options, index futures, index options, and single stocks futures expire. The Dow Jones Industrial Average advanced 32 points or 0.08% to close at 41,985 points. S&P 500 index climbed about 5 points or 0.08% to end at 5,667 points. The Nasdaq Composite advanced 92 points or 0.52% to settle at 17,784 points. Friday's session was volatile with major US averages coming off their lows after US President Donald Trump said that there will be some flexibilities with the US tariffs. However, he maintained that tariffs implemented at the coming 2nd of April deadline will also be reciprocal. This message caused confusion in the markets as companies now cite uncertainty around their planning, capital spending, and hiring decisions, causing firms to play safe or slow down any expansion. Bellwether companies like FedEx fell 6.5% on Friday after cutting its earnings outlook, citing weakness and uncertainty in the US industrial economy. Sports apparel Nike was down by 5.5% after the company said that sales this quarter would miss analyst expectations because of tariffs and falling consumer confidence. The US Fed also announced that they will hold interest rate as expected at 4.25 to 4.5% and downgraded its outlook for economic growth and increased its inflation projection. Fed Fund futures pricings now show that the highest probability is for 3 rate cuts by the end of the year. For the trading week, the 30 stock Dow Jones Index added 1.2% for its first winning week in 3. The S&P 500 advanced 0.51% and the Nasdaq Composite gained 0.17%. Both of these indices managed to clock their first winning week in 5. In Asia, Hong Kong stocks registered back-to-back weekly losses for the first time since January as tech shares tumbled on mounting profit-taking pressure. Stocks in Hong Kong extended their slide on Friday to close the week in the red as sentiment weakened amid a continued sell-off in Chinese tech stocks and disappointing earnings from large-cap companies. The Hang Seng Index fell 2.19% or 530 points to finish at 23,689 points. The Hang Seng Tech Index tumbled 3.37% or 196 points to close at 5,639 points. Chip-making giant SMIC fell 7.5% to a one-month low, while market heavyweight Alibaba also lost 3.5%. Investor sentiment in Hong Kong were dampened after major tech stocks failed to recover from a prior day slide and ended the week in the red. Conglomerate CK Hutchison also fell 4% after logging a 27% drop in attributable profit for the year of 2024 to Hong Kong's 17.1 billion. CK Hutchison has been facing backlash for its decision to sell a stake in Panama port operator to a consortium led by US firm BlackRock. The optimism around China's 2-session meeting this month, DeepSeek, and presidency meeting with tech leaders has all been priced in with major Hong Kong indices at the current levels. This caused investors to take some profit off the table. And for the trading week, the Hang Seng Index fell 1.13%, while the Hang Seng Index lost 4.1%, slightly avoiding the correction of the 5% level. Back to Singapore, our benchmark STI Index closed slightly lower on Friday, tracking losses in the regional market as trade war fears still linger. It ended Friday trading session at 3,926 points, down 4 points or just 0.1%, stopping its 4-day winning streak. For the trading week, the STI gained an impressive 2.38% after last week's 2% loss. Top gainer on the STI benchmark index last Friday include YangZiJiang Shipbuilding, ThaiBev, and Citrum. At the other end of the table, ST Engineering lost 4.2%, while Jardine Matheson Holding declined 1.35%. Keppel also fell by 1.15%. ST Engineering became the biggest decliner last Friday, sliding 29 cents or 4.2% to $6.62 as the stock hit successive high in the previous session and became even more expensive than DBS and other leading blue chip names. Our 3 local banks also ended last Friday mixed, with DBS losing 0.2% or 9 cents to $45.31. UOB added 0.4% or 15 cents to $37.95, and OCBC fell 0.2% or 4 cents to $16.98. So for this week's technical analysis, let's look at top gainer on Friday, YangZiJiang Shipbuilding. Last Friday, YangZiJiang Shipbuilding share price closed up by 13 cents or 5.56% to finish at $2.47. For the trading week, their share price has gained 18 cents or 7.86% after losing 4.18% last week. From the chart, we noted that YangZiJiang share price has been in a range-bound formation for the second half of 2024 between the $2.20 level and the $2.75 level. This range-bound formation came after the impressive gain that it saw in the first half of 2024, rising on the industry upcycle. This year, we saw YangZiJiang share price rising higher in the first 2 months of the year, hitting a high of $3.32 on the 20th of February. After that, as Donald Trump started to introduce tariffs, YangZiJiang share price came down massively and hit a year-to-date low of $2.21 on the 13th of March. This brings us back within the range-bound trading zone that we saw in the second half of last year, using the $2.20 level as the support level right now. Last Friday closing price at $2.47 is also now above the 20-day moving average, now at $2.43, while the lower bound of the Bollinger Band is now at $2.10, and this will give further support to YangZiJiang Shipbuilding share price. The next resistance level will be the red line that you see here, which is the long-term 200-day moving average, now at $2.62, while the upper bound of the Bollinger Band, now at the $2.76 level, will be a key resistance level to watch out for after we tested this level several times last year. Looking at the indicators, the MACD now show a positive reading in the last 2 trading sessions. This signals that the MACD line has crossed above the signal line last week, confirming that an upside rebound is in play right now. The latest RSI reading at 44 points is just 6 points away from the 50-point neutral mark, after coming back from below the 30-point oversold level that we saw last week. This signals that the rebound and the uptrend momentum is gaining strength right now and will likely continue further in the near term. So with the MACD indicator and the RSI indicating that YangZiJiang share price is likely to rebound further in the near term, investors may use the 20-day moving average now at $2.43 to further accumulate on YangZiJiang share price. Based on 8 analysts covering YangZiJiang in the past 3 months, 6 have a strong buy call, while the other 2 also have a buy call. There are no sell or hold recommendations, and the average 12-month target price is at $3.52, with a maximum estimate of $3.92 and a minimum estimate at $2.92. And these are the updates that I have for you this week. If you find this information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.